The market has been bad and the Fed just kicked the market. Agreed? But what I would really like you guys to actually look at is stop denying the fact that we are preparing for a massive rally. Now, these charts, if you focus on these, it actually gives you that clear narrative where you are at. So imagine you see this chart and this is history. Great. Now you go on to the current situation of the market, altcoin market, and can you kind of say, okay, there is no similarity between these? For me, when I look at this particular pattern, that definitely looks like a lot in rhythm. So it's kind of following what it had done in the past. But one of the important stuff which I would actually take you guys is like, okay, you can come here, look at the market and actually ask you that question, okay, is this done? Because right now people saying drop out of the market. This is a bear market. You are in a bear market. Okay, great. So let me ask you one question. Now you can answer this and say, if you don't agree with me, drop the video, move out. Great. If not, consider watching this till the end. So the question here is, what do you consider a market cycle? For me, it's from the bottom to the top to the next bottom. Great. Agreed. If you have something else, okay, fine. And what do you call a bear market? It's from the top to the bottom of the next cycle. Do you agree that point? Now look at these. This was your top, first one, and this was your bottom. Great. Then this is your next top here, and this is your bottom here. So if you're actually zooming in, looking at all this, asking that question to yourself like, okay, fine. If that is the case, first cycle for 20 days, second cycle, 1,148 days, third one, 1,442 days. So for anyone having that doubt, it's a 3-year market cycle, that kind of stuff, I would actually take you here and say, okay, do you really think is a 4-year market cycle? You want 1,460 days to be in a 4-year market cycle. And this one comes close, I agree. But we had two before that, which never agree on that one. Now we take the same logic, being, a human being, we take that information. Okay, last one was like this. And you try to take that into account and move. What happens is you go all the way into the end of 2023. I know it's painful. But if you want to reassure that and ask the same question to yourself, you can literally just look at these. So if you are coming here, looking at the half part of this. So for 20 days was the first cycle. If you look at the half part of that, you already did a lot of run up. Now you don't have historical numbers to compare with, but after that in these cycles you do. And that's where a TA-based gem comes out. Now I'm calling that gem because that actually gives you a logic to look at this cycle and say, like here, right now, it is one area of crucial value for technical analysis. Now, then you actually take that with other assets. Then you go into these old assets, because I see a lot of people, when I use this particular chart and say, okay, you have one wave, you drop 86%, you have another wave, you drop another 86%, and then you have the final blow off the top and go down 99%. A lot of people have hardships agreeing on this because that's the last market cycle. Let me actually take you to this market cycle. Not just one asset, but different assets inside this asset class in this wave. Right? So in this entire market cycle, you got this one around 85% drop. Great. Followed by that, after the next one up, you got another one. So which definitely shows you it's running similar to that of what's happening here. Wave 1, you drop. Wave 2, you drop. Now you can deny the fact that it is like that. But if you actually take the numbers and measure like, okay, what it has done here, say it is 20x. Fine. If you take the numbers and look for the wave 2, it's actually 60x or close to that. Now, if you go to the wave analysis, you kind of see like wave 2 is the biggest wave. Great. And usually it comes like if the wave structure, the wave one, is not blown up two big ones, normally it's 2 to 3x. And here it falls within that criteria. So for me, there is no denying the fact that this exists in the market. Great. Now you go on a different asset. Now patterns are a little bit different here and there, but again, you come to see like 85% to the downside, then you go back up. And what happens? 95% to the downside. If you know that pattern from history and learn from that, for me, that's like, okay, that actually means some of these assets have actually done two waves, but not all of them have. And that's where the actual opportunity lies for me. Now, in XRP, one confusion which arises is this area. You can say, okay, we dropped 75%. But that was the SEC coming and hammering you when the entire asset class was going up. We all know that. We were there. We were there back then and we were saying buy it here. I don't know how many of you listened back then. You can go back and check the YouTube. It doesn't lie. The videos are there, right? Because a lot of people were going bearish at that time, even the big YouTubers. But we were saying, okay, most likely that's going to be the bottom. And we were buying because no one knows what the exact bottom is going to be. But you know what happened after that. So if you are looking at the regular side of this, you can actually go look at a highly correlated asset and ask this question again. Now you end up with the actual stuff. Now, if you go look at the Binance, what they are showing you in the Elliott wave structure, you go look at the pattern analysis and ask this question like, what really is happening here? And then you come back to the market and observe this. That really gives you the real perspective of what to do and when to do. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now, if you understood these key points, like, okay, in every cycle, you get these downturns and people go crazy during this time. Yes, we are all human beings and that happens. But understanding that the opportunity lies after this is what gives you the actual standpoint in the market to lay down there. When the market hits you, it's okay. If you understand what's happening. Now, if you actually go into this market and actually ask the same question repeatedly to yourself and then try to find out, okay, do you agree with this? Do you see this as interesting? Because for me, looking at this as a macro wave, now, a lot of people will have different opinion inside this because they would actually go and kind of, make the judgment saying this is one cycle, market cycle, great. And the next one, this one is another market cycle and so on. But for me, it's really hard to agree on that point because for me, when I'm looking at that, that is not a market cycle. I would say or argue that this is a market cycle. It started here, say this was the bottom, this is the accumulation, you broke higher. So in the wave structure, wave 1, wave 2, wave 3, this is your cycle. The bottom is here, the top is here, the next bottom is here. So that's your complete cycle. So if you take that here, where are you? You came top to the all-time highs, you consolidated there, you made this pattern, look at this pattern above the all-time highs, and that was still wave 1. Now you had wave 2, you have wave 3. But remember, there are assets which have already done 2 waves by this time. And there are assets which are still not starting wave 2. They are here at the bottom and XRP is one of them showing huge opportunity. Then you go look at like a highly correlated asset. This is XLM. You don't actually get too much of that kind of volatility here because it was still trending all the way back up. Fine. Now, when you actually take the measurement, you see 88% drop. All of that is actually good, great. Because when you go back to the market and look at what happened before, you actually see like, okay, 88% drop is not something new into the market. And after an 88% drop, it's not going to zero. Historically, you have done big numbers. So that's 100x after that. Now, not everyone likes 100x in this way because they want it without the first pain part. But, if you have been in bodybuilding, it takes time and you need to put in the effort. So in the market, you hit the buy That's not the effort. Half of that effort comes before that buy. You put in the time, you look at what asset you're buying, why you're buying that, what's your decision making metrics. You look at the company, you look at the project, you look at the adoption, all those fundamental stuff, and then you enter. And once you enter, now what's your next part? It's waiting. That's the hardest part. When the market goes up, down, and volatile, sideways, all those crazy stuff, that is when we can say like, this is really hard. Now, if it was not hard, everyone would be in the markets and making money. You know that not a lot of people make money in market. Only a few make money in the market. And if you ask anyone who actually made this 50, 100x in the market, unless they are that super lucky guys who entered here, wow, they turned super lucky. They rode all the way up. Great. Now there are human beings who entered here at the top and went down 85%. But if they wait a little bit more, which is the next half, they come back at least to break even if they don't have enough patience. Or if they do, I'm not saying you're going to get the absolute top. I am saying you are going to make money. Now, for some, 10x is great. For some, 10x is nothing. For some, 100x is great. For some, it's moderate. So it's your question about what the market is doing. So if you are in the market right now, you are looking at these charts, ask this question to yourself. Where do you see these assets? Do you really believe in your core as an investor like you are in a bear market? If you do, okay, exit the market, right? If you completely believe this is a bear market, why are you in the market? I don't understand a lot of people saying that. Because if I'm taking this into consideration, one thing in common for all the bear markets you can argue is like, okay, we get a 95% drop. But in crypto, if you actually look at all the other factors, this doesn't actually feel like it is a bear market. Now, you can say that was a bear market, saying 3 months bear market. But does that actually matter? 3 months bear market? For me, that's a correction. Now, if you come here and look at like what was the number of days taken here for you to break back higher, it was like 400 days in the last cycle. So now we come here and try to take that number and put it here. It is right now 500 days. Fine. But what's different? Here, if you take from this consolidation range, your consolidation range was like 650 days. But when you come here, the breakdown and your consolidation and then you breaking higher, it's 840 days. That's 200 days more. So automatically, this cycle is longer. Now, a lot of people don't agree with this point. Some who used to agree before don't agree right now. But again, that's not your problem. Your problem is you need to understand this correctly, not just take it from me or any other random YouTuber. You look at this and ask like, okay, what's the market cycle for you? Is it just the bottom to the top or to the next bottom? If that's your metrics, fine, do it like that and follow this. Because for me, this is clear sense. This is one cycle, you come back down. Now, one thing in common in all of these cycles, which you need to keep in mind, and which was the only exception in the last cycle, is that you did not actually get big drops in the wave. Say if you are looking at the wave 2 and correction here, it's 73%. But in the last cycle, you never got that. Your correction was like 30-40%. And when your correction is smaller, technically, what happens? You don't consolidate more, you don't drop too much, and your upside is also smaller. And if you measure each of these inside the last market cycle and the two before that, you will understand what I'm saying. Like here, you drop 70%. And what happens after that is a 10, 15, 20x. Here, you drop 40%. Great. And what happens after that? You run 200%. And then you drop again. So you understand that point. Now, in this cycle, you need to actually ask like, okay, what do you actually see more like? Are you actually dropping these 30, 40, 50%? Are you dropping like 50, 60%? Are you dropping regularly like this? Or are you dropping like this? So you go in the market, you look at this. For me, if you agree, I'm like, okay, this is wave 1. You corrected, consolidated here. Great. Now what are you doing? You went up. You are doing the same here. Now, down time in the market is not really good to be the time in the market as a human being with emotions and psychology. But if you think about this and ask the same question, the guys who bought in here thinking that, okay, this price is really low, I'm going to try and buy low, really made a lot more money than the others. But those who bought in here also made money. So it does not actually matter what the other guy is making. If you're making money, that's because your time, your interest in an asset and your entry point, great, and how much you entered. So you don't have to compare you with another guy in the industry who has been there for like 5 years, 10 years. If you're entering now, great. If you happen to get on the top, I happen to enter a lot of positions back in here. I was trading the market. Fine, great. Now, what happens if you wait through that average down and you had a lot of massive opportunities to average down, especially in XRP. So when you actually come back and talk about XRP in that matter, now, do you have concerns? Yes, I do have concerns in short term. If your time horizon is like next 3 months, it's like next 6 months for XRP, I do have concerns. But if you have 2 years, if you have 3 years for XRP, I don't have much concerns because central bank digital currencies are going crazy everywhere. I'm actually looking at the fundamental part of this. You go through this, you ask that question to yourself. And yeah, guys, I actually really want to highlight. I actually saw a guy who's trying to imitate me and contacting a lot of guys in person asking for money. I never do that shit. I never do that. Why would I do that? Yeah, you people know me from some time, right? I don't do that. Now, coming back into this, globally, central bank digital currencies are here. And in a year or two, you're going to see a lot of nations coming into this created arena because they want you to control or whatever it is, but it is coming. Whether you agree or not, it is coming. And when it actually comes, you can literally stand there and say like, okay, there is something to be solved there. If you need to move one token to another one, what do you need in between? A means of exchange or a bridge, whatever you term it. It is okay, but when you enter into the market, you also do understand like this is not just one thing. You see the macro environment changing. So the time schedule may be limited. And that's when I actually go back into the charts and look at this, that does make sense for me. Why? Because say, for example, you go back in. When you had a longer time, you had smaller but a lot of dips. When you had a shorter time span to go up, you drop heavily. Great. So now you go here and you can actually literally ask like, okay, you went up, you consolidated here. So you actually made the bottom here. You went up, you consolidated here. Then what happens? In a few days, maybe below 30 days, I think, it actually hits a 10x. So if you take the number of days which it actually needed to do that, almost 30 days. So that 30 days made a huge difference in the market. So if you bought, say you missed the bottom, great. This was only 200 days. And this was only 260% if you still was having hard time staying in the market. But what happens if you stay there for a little bit more? That was just 30 days more. You made 40x. Say you missed the top, you made 30x. So those lucky guys who entered here, they made 10x, great, but you bought in much lower and with a little bit more patience, you outrun them in terms of ROI. But again, what's needed? Patience. What's needed? A mindset which is ready to learn more. Now, in any field, let it be business, let it be investing, let it be as a student, you need to learn on a regular basis. At least understand your field. If you are investing, you're looking at your assets and asking that question, okay, I understand this perspective. Fine. But if you are saying we are having a bear market, this one, believe me guys, next one is going to scare the hell out of you. I'm so sure if you say this was a bear market for you, this is nothing. The next one which is going to come is going to be crazy. 80% drop here is not the biggest step which you're going to see. This for me is like this. You're going to go way higher. That's a different story. But after that, you are definitely going to see the market dropping, and those drop can be heavy because that coincides with a lot of macro issues coming in, which is not looking good. Maybe December, maybe Jan, who knows? But if you make a top before that, there's going to be really interesting. Again, it depends on who you are, where you are, and what type of investor you are. If you are there for like 2-3 months, it's going to be hard. If you're saying I've been in the market for a year and a half, I bought at the top, that was hard. But what you can do is spend a little bit more time, average down if you want to. If not, it's okay, because every time what happens, now if you enter at the top of a market cycle, that's a different story, because the time taken for that is going to be most likely outrun your patience level. Because if you look at this, that's like 800 days to bottom. But the difference between that and the corrective sessions inside that is most likely it coincides with the actual bull market. See, if you take this run up from here till the top, that gives you 140 days. Great. Then you take the downside, that gives you close to that, 160 days. Fine. Then you actually go look at like, okay, we started the run up, we went up like 160 days. And if you take from the top to the bottom, you come like 140 days. So that kind of gives somewhere close to it. But the next one is not like that. If you don't have patience and this one itself was so heavy for you, Jesus Christ, the next one is actually going to be so bad for you. So that's why I'm saying, if you are in the market and you think this is a bear market, it's fine. A 10%, 20% drop is going to scare the hell out of you. Exit the market. The market is not for you. It's hard, but that's the truth. But if you have seen all this in last 1-2 years and you're like, okay, I do understand there's going to be a lot of volatility and I don't care, because I know this asset and how it's performing. I need a little bit more patience as a human being. It's hard, but I'm working on that. Fine. That's the step. That's how we do it. So if you ask me, why would I say like, okay, this chart is saying, okay, buy? For me, it is. And literally, I'm entering more trades right now. In the groups, I'm posting my screenshots, right? I'm entering different trades right now. Because I strongly believe for a lot of assets we are here, some of the assets we are here, but still not here. And if you ask this question, where do you buy? You buy when it is undervalued. And if you have any doubt that the current crypto market is undervalued or overvalued, well, that's hard choice. But for me, it definitely is undervalued. And undervalued does not mean it's going to go higher tomorrow. Great. Understand that point? Because no one knows where the bottom is going to be. There's going to be a lot of volatility. The market does this stuff every now and then. So if you were in the market for XRP and you were getting scared by every 25-30% drop in the market like this, you would never make it. Like if you have already been in the market, you literally rode XRP towards $1.9, you went through all this. Great. Now, when you're going through this, understand the last part. When you went through that, it was really hard. You held on. If you do the same, wave 2 is the biggest wave. Now, you can go on to any different asset for that matter and ask the question. Some have completed 2 waves. Some has already completed 3 waves. Say this is Chainlink. If you actually go look at like what it was doing, 8x in the wave 1, you corrected back down. I think it was like 60%, 70% something. Can actually measure that right here, right now. Yeah, 67%. And then you went up 10x. Then again, you corrected back down. Your bottom was somewhere like 63%. So you do these big dips twice before you go into a bear market. Like you can take any asset which has actually went through the 3 waves and look at what they did in last cycle, what they're doing in this cycle. Because a lot of people argue that was in last cycle, but these are happening in this cycle. So you can be in the denial mode for however long you want, but I don't think the market is actually going to stop for anyone. That doesn't mean the market is going to break higher the next hour and go to the roof tomorrow. It means the market can literally test your patience. You buy, the price drops. That, most likely that's what happens in most of the exchanges. Exchanges are not designed for you to make money. They are not a charity organization. Understand that. You make one trade, you make $10,000. Great. You make $1 million. Great for you. But they don't get that. They get the spread. So think, what would they do to get more spread? It's common sense. But the issue is, common sense is never the common practice. So guys, if you are going to that direction where you really want to make money, think properly, put your energy in, and ask this question to yourself. If you feel like, no, this is a bear market, exit the market. If you think, okay, I'm learning from the history, I'm looking at my charts, I'm looking at each of my assets, because some have already done wave 3. Some are in wave 3, or it's just going to enter wave 3. Some are still waiting for wave 2. So if you are in that category, I know the patience is really high, because most of my assets are in that category where, I'm waiting for wave 2. But that makes me an optimist, because I'm not going for wave 3 where it's like, okay, completely exit the market, because you don't know what next 4 or 5 years are going to be like. Fine. But if you are in an asset like, okay, wave 2, wave 3, it's both there. For me, that's exciting. I don't know about you, but I think you would agree. So guys, if you received value for your time, please do hit that like and subscribe button. And if you want these kind of updates on a regular basis, put that notification bell as well. And if you are looking for this trading stuff, if you are looking for the market alerts like this, now this is not just one. We are going through a lot of different assets to see what they are doing. Because you don't just buy the market, you buy different assets in the market, right? Some of them completed wave 3, some of them did wave 2. So getting that idea is important. And if you want that, only if you want that, look at the Patreon. The link is given in the description below. So guys, I'll meet you on the next video. Bye-bye.